Welcome back to Squawk on the Street from Washington today. Treasury Secretary Scott Bessent saying this morning, as we just reported, that the Fed should wait and see on rate cuts and acknowledge some economic impact from the war in Iran, but called it, quote, worth it. Joining us now, first on CNBC, is National Economic Council Director Kevin Hassett. There is a debate, a big one, Director Hassett, on what the Fed should be doing right now. Do you still believe that they should be cutting, or are you on board with this wait-and-see approach?
Well, I think Secretary Bessent understands, after looking at the meetings, the Fed meetings and the minutes, that there is disagreement amongst some of the governors about what the next move should be. If I were a governor, then I would be saying that an increase in the oil price that's related to disruption in the Middle East is something that we've seen over and over again. And it doesn't cause an increase in inflation. It's just sort of a level adjust that will quickly reverse itself when the situation is resolved. And so I still think that because the big supply shock that we're having in the U.S., because productivity is up so high, that there's downward pressure on prices. And you're even seeing that if you look at the Consumer Price Index, which I'm sure a lot of people who went to the grocery store in the last few weeks have noticed that prices are actually finally going down. So I think that there is room for the Fed to cut still.
Yeah, I mean, the PPI backs up your case. You must have been happy to see wholesale inflation, especially core, was softer than overall expected. I think the uncertainty, though, Director Hassett, is how much that oil price shock lasts and how much it does seep into the system, because oil can affect so much more, transportation and manufacturing, than just what you're paying at the gas pump.
You're right, and we're, of course, sensitive to that. But I think that the people who are going to the grocery store right now and seeing that egg prices are almost at an all-time low understand that that's because of President Trump's policy to control the avian flu. The beef prices went way down because President Trump opened up imports from Argentina. And drug prices were down because of all of the policies we've pursued to lower drug prices. And so while there's macroeconomic stuff that the Fed has to think about, that we've been focused like a laser beam on helping the folks that go to the grocery store find that prices are going down because of prudent deregulatory measures that we're taking. And so not only do we have a good inflation story in terms of the numbers, but we have a good inflation story because we know where the numbers came from.
Yeah, I mean, the grocery stuff it has been better news, but, electricity prices are high. People feel that. We've seen health insurance and medical fees high. We've seen airline fares go up. I mean, there are still pockets of hotter numbers, and Americans feel those, too.
Of course, and those things that you're mentioning are energy related, and anyone who looks at a chart for energy prices will see that they've gone up quite a bit since the situation with Iran began. But the president is confident that it can be resolved, and when it's resolved, then those prices will go right back down to where they were before. And then if you do that, and you pile on top of that the fact that core inflation is running around 0.2%. In fact, for the Consumer Price Index, it rounded up to 0.2. It was actually in the 0.1 range. And so when you've got that, plus imagine if oil prices start going back down because the situation resolves itself somehow, then you could be looking at an inflation close to zero. So that's something that the Fed needs to pay attention to, because remember, energy prices going down would feed through just as CPI, top line CPI has had energy prices going up right now.